Hey folks, see Rachana Ranade here, and I welcome you all to a very interesting IPO summary video of OnEMI Technology Solutions Limited. First things first, as usual, let's try and understand what does the company do. Well, the company has this app called as the Kissht app. You might have seen this on Play Store as well as on the iOS store. Now, this is nothing but a technology enabled digital lending platform that provides instant loans using proprietary AI to India's emerging middle class. Now, let's understand this with the help of a simple example. Okay, here you have loads of borrowers who may want to have a personal loan, and here we'll have banks or NBFCs who would be keen on disbursing such loans. Okay, now amongst these NBFCs, we have one specific NBFC which is their wholly owned subsidiary called as C Creva. Okay, now what is this app going to focus on? App is going to act like a digital marketplace which will help connect these banks and NBFCs with these borrowers by delivering fast, accessible and personalized credit using technology as well as data analytics, right? So I hope this is absolutely clear. The role of that app is clear. Is the app going to primarily act as a digital marketplace? Yes. Is it going to enable the lending process with the help of technology? Answer is yes. But what sort of loans are actually disbursed? Where does the company get the funding to disburse the loans? All these sections, all these points we're going to discuss in the upcoming parts of the video. Now we'll try and go a little bit deeper into the business of the company, and in this segment we'll try and get answers to three questions. Number one, what type of loans does the company enable? Number two, who is their customer base? Very important discussion. And number three, where does the fund come from to disburse the loans? Okay, so all important points. Keep on watching the video, right? The very first one, as I discussed, is what type of loans are disbursed. There are three categories here, I can say. Number one is personal loans. Number two is loan against property. And number three is not a loan per se, but they are into other products as well, which is in a pretty much early stage. Now, first things first, talking about personal loan, which accounts for more than 94% of their total AUM. Okay. Now, personal loans are typically small ticket loans for different purposes. Now, it could be something like consumption. For example, a customer needs to buy electronics. For that, they have taken a loan, or they have taken a loan for medical, they have taken a loan for education. It could be multiple possibilities, right? Second one, in this case only, for personal loans only, it could also be a business need. It could be something like a working capital need. It could be something like to buy certain tools. Okay, but one category that we discussed right now was personal loans. This is mostly an unsecured category of loan. Second category is a loan against property, which is a secured loan. Now, who is typically a borrower in this case? Here, typically, we are talking about an MSME as a borrower who is borrowing for what? Who is borrowing for the business expansion, and typically the funding happens as a longer term funding. Okay. Now, the third category is about other products where they are also into selling of, let's say, something like a health insurance, or they are also enabling some savings options, investment options like FDs also. Okay. Well, now that you have understood what type of loans or other products is the company giving, now let's focus on who do they cater to. Let's try and understand the customers of this company. Now, for this, if you have a look at this pyramid, which is India's credit pyramid by household, and this is an expected one because this is about financial year 25 to 30. This one says that Kissht is primarily targeting the middle part of the pyramid, which is the underserved and the credit active. But why is this very important to understand? We are also going to understand by extreme detailing. For example, are they mainly into salaried? I mean, are they giving more to salaried people or business people? How much is their typical income range? Whether they come from tier one cities, tier two cities, or what? So we'll now go into the customer detailing part. Okay, for that, let's have a look at this one by one. First, who are their customers? So it's almost a 50-50 split between self-employed and salaried people. Okay, how much do their customers earn? What is the income segment? Now here, if you see, it's a pretty much well diversified one, but maximum customer base comes from a class whose monthly earning is somewhere between 50,000 to 75,000 rupees, and that accounts for 38.96% of the loan disbursed. The second category is in the income range of 25,000 to 50,000, which accounts for 28.69% of the loans disbursed. The third one is the category where the income range is 75,000 to 1 lakh, which is 20.4%, and that the balance one is above 100k. Okay. Now, as I mentioned, where do these people come from? Majority, 63.38% of the loans are being disbursed to people who belong to metros and tier 1 cities. These are the top 50 cities, and balance come from tier 2 and beyond. Now comes the age split. Who is their borrower? So, if I'm talking about age split, more than 50% comes from 25 to 35% category, more than 35, 25 to 35 years category. More than 35 years is roughly 26.45%, less than 25 is 18.8%. Now, a very, very interesting statistic. Who is borrowing? Borrowers whose credit score is between 700 to 760, that accounts for 74.09%. People who have a credit score of more than 760 is 21.19%, and less than 700 is just 4.72%. Why are they taking this loan? What is the purpose of this loan? 47.99% is business, 29.72 is consumption, 13.46% is emergency, and balance 8.83% is others. Okay. Now, moving on to the final one in this section, which is how does the debt split for them look like? 41.3% is on book and 58.7% is off book. Now, if I'm talking about on book category, on book is basically the funding that they are doing through their wholly owned subsidiary, Creva, if you remember. Okay. Now, okay, TK, Creva is doing the funding, Creva is giving the loan, but where is Creva getting the money from? And for that, if you have a look at this on book, you can see that they have raised funds primarily more than 50%, 55.02% through NCDs, 27.75% through term loans, and balance through other sources. But if I'm talking about off book means what? They are facilitating loans by or through other banks and NBFCs. And for that, they are saying if it's 100 to 0, so basically, let's say 100% of the loan is being fulfilled by other NBFC. Example, right? So such category would go under, would be like 65.83% of the off book. And if it's a co-lending arrangement, that accounts for 32.67%. Well, now that you have understood so much about who is their customer base, you have understood what types of loans are disbursed, how is the funding taking place. In the next section, we'll talk about the industry analysis. Now let's understand about the industry analysis. We're going to talk about this into three parts. First, we'll understand about the overall credit market. Then we'll talk about the retail credit market, and ultimately then we'll talk about the digital lending surge. Okay. First thing, the overall credit market has grown at a 12% CAGR from financial year 2020 to 2025, but it is expected to reach 488 trillion by 2030 with a CAGR of 15%. So important point here is that the CAGR has been 12% from 2020 to 2025, and it at the expected CAGR is 15% from 25 to 30. Okay. That was about the overall credit market. Now let's focus only on retail credit. Now, retail credit has already grown at a 17.1% CAGR from 2020 to 2025, and it is expected to reach 201 trillion rupees by fiscal 2030. And if I'm talking about personal loans and loans against properties, this one is projected to grow at 20 to 22% CAGR through 2030. I mean, pretty high up numbers, right? Now, if I'm talking about the digital lending surge, this is again crazy. Digital lending surge, in fact, has actually rapidly outpaced the traditional channels. I also tried to understand why. I mean, I talked with a lot of people. They said that who will go to the bank, who will do loads of documentation, sign here, sign there. Instead of that, we are sitting, we have an app, tuck, 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 loan disbursed. People are going more for ease of money disbursal rather than going through the loans processes, right? But what has happened to that through that because of that, the overall disbursals through the digital lending are expected to rise from 2.3 trillions in fiscal 25 to 7.2 trillions by fiscal 2030 at a CAGR of 25.63%. Now, what could be a driving factor here? One of the driving factors definitely has to be India's very high smartphone penetration, which is almost 85%. Plus, we also have lowest data costs globally. We also have amazing digital infrastructure like UPI, and we also have an account aggregator framework. So, all in all, with the industry analysis, I'm sure you have understood that this is a growing industry. In the next section, we'll talk about company specific financials. Now, let's talk about KPIs. First, we'll talk about operational KPIs, then, we'll talk about the financials, right? For operational KPIs, first one is AUM, assets under management. Obviously, thumb rule is higher the better. And if you see that their AUM has been continuously increasing, which is a good sign. Second one, if I'm talking about disbursement, again here it will be higher the better. Now, if you see from 23 to 24, the disbursement was on a higher side. It softened a bit in 25, but now it is again getting back during the 9 months ended 31st December 2025. Now, if I talk about average ticket size, or be it the user base, or be it the customer base, again, what is going to be the logic? Higher the better. For average ticket size, if you can see, it has been continuously increasing, has softened a little bit for the 9 months ended data. For registered user base, again, same thing, has been continuously increasing, and for the customer base also. So, a registered user base and finally the customer base, again, this one has been continuously increasing. Now, if I talk about, because if I were to go for the financial matrix, first let me talk about financials. Their revenue from operations again has been continuously increasing, and it has increased at a CAGR of 16.55%. Their EBITDA also has shown a CAGR of 103.18%, and their PAT has increased at a rate of 140.95% CAGR. All the CAGRs that I'm discussing are for the financial years 2023 to 2025. But if I were to understand about the NPAs, because that is also an important parameter that you should track if you're talking about NBFCs. For this company, gross NPAs stands at 2.9% as at 31st December 2025. It is increasing, but net NPAs is also at 0.38%, which is way lower than the gross NPAs. The logic might be higher provisioning because their PCR also stands at 86.88%. So, all in all, this was about the KPIs at an operational level. We also talked about the financial metrics. Now, let's understand about how this company stacks up with its peers. Now, let's start with peer comparison. As per their RHP, Bajaj Finance, Chola, HDB, and SBI cards are their peers. Whatever data I'm presenting in front of you right now is 9 months ended data, December 2025, and all rupees are in millions. Now, if you have a look at the AUM first, this is way less as compared to someone like Bajaj or Chola or HDB. So, OnEMI is clearly a very small player as compared to its peers, and that also gets reflected in the PAT numbers. Look at the PAT, it's just barely 2000 million, whereas look at Bajaj Finance, Chola, HDB, they are way bigger, right? But because a company is smaller in size, of course, they can control certain parameters, they can generate better returns. For example, if you have a look at the ROE is way better as compared to its peers. Even if I'm talking about NNPA, that is net non-performing assets, here the pointer is lower the better. And if you can see, NNPA is lowest amongst all the entire peers. And for PCR, the provisioning ratio, that is again, the thumb rule here is higher the better. And if you see, PCR stands at, so provision coverage ratio stands at 86.88, which is way better than its peers, right? Now, if I go on with the key risks for the company, the very first risk that they have mentioned in the RHP is that a significant portion of their AUM consists of unsecured loans, which is 98.15% of their total AUM as at 31st March 2025. And they say that any decrease in demand for unsecured loans can adversely affect the business or the financial condition of the company. The second key risk that they mention is about the GNPA level, and they mentioned that the GNPA was 2.9% and 2.89% as at 31st December 25 and March 25. And they are saying that though they are maintaining a PCR, they are saying that if there is a change in the PCR, in the provisioning requirements, if the rules and regulations change, then the financial condition, cash flows, results, that could again get adversely affected. The third risk that they have mentioned is about their subsidiary C Creva, which is about the on-book loans that we have discussed earlier. They are saying that if there is any disruption in the business, that could materially and adversely impact the business, financial conditions, operations, and cash flows. Now, talking about the valuation, interesting point here. If I'm talking about the PE ratio post IPO, PE stands at 10.84. But if I'm talking about the industry average stands at 30.83. If I'm talking about PB stands at 0.91 for the company, and for the overall industry average, that stands at 4.88. So be it PE or be it PB, their valuation metrics are way lower than the industry average. Talking about the IPO details, price band is 162 to 171. Their IPO has opened for subscription from the 30th of April, closes on the 5th of May. It's a mix of fresh issue and OFS. Fresh issue is 850 crores, which is like the major chunk of the IPO, and a smaller portion is OFS, which is 75.92 crores. What are they going to use this money for? They are going to use it for augmenting the capital base of their subsidiary Creva to meet their future capital requirements. So that is it about the overall quick summary of the IPO of this company. Do let me know your thoughts in the comment section below. Are you planning to apply or are you planning to avoid? Let me know that in the comment section as well. I'll see you in the next one. Till then, take care. Jai Hind and bye bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.